Welcome to our Established Business Forecast tutorial. My name is Tom Folliard. I'm the owner and developer of the CorpFin.net software. This tutorial is intended for those who are interested in creating 5-year financial forecasts for businesses that have 1 or more years of historical financial information. Before we begin the tutorial, let me make 3 general points about our software. First, if you're looking for a spreadsheet-based product to create a forecast, or to build models from scratch, you've come to the wrong place. All of our applications are web-based, our code is proprietary, and it's not downloadable into other software applications. Second, our software does not perform the same functions as budgeting modules contained in integrated accounting software from companies like Intuit, NetSuite, Intacct, and others. Those budgeting modules generally set and track detailed monthly, account-by-account sales and spending responsibilities. By contrast, we take a multi-year, more specifically a 5-year, top-down CEO-level approach to business financial planning. We provide the ability to very quickly and easily model the annual and cumulative impact of various long-term operating strategies on cash flow, balance sheet position, and business value. We forecast information at approximately the same level of account detail as an accountant's standard year-end report. Finally, all of the CorpFin.net software applications are developed for use in our financial advisory business. The applications have been vetted and used for over 6 years by our partners who are all experienced corporate finance practitioners and CPAs with Big Four backgrounds. Let's move on to the tutorial. We'll show you the output of our multi-year forecast model and then show you how to create that output. Prior to this session, I accessed CorpFin.net, entered my login and password, accessed the secured member section of the site, established a project for Company A, entered historical income statement and balance sheet information, and created a 5-year forecast. Let's look at the output of that forecast. I do that by clicking on Multi-Year Scenario 1 to access the Forecast Model menu. The menu is divided into 3 sections, namely Review Historical Data, Review Forecast Data, and Change Forecast Assumptions. The Review Historical Data section contains 2 reports reflecting the historical financial information recorded when a forecast is initiated. The Review Forecast Data section lists 8 reports containing both historical and forecast data. These reports are automatically recreated each time a forecast assumption is changed. The Change Forecast Assumptions section provides a link to the Financial Forecast Assumptions form. That form is the key to revising the first and subsequent drafts of a forecast into one that more nearly reflects the expected results for the business. First, let's take a look at all the reports generated by the forecast model. The reports are as follows. The historical income statement and balance sheet reports contain the historical financial data recorded when the forecast was initiated. Their levels of account detail make them useful for business overview presentations and as reports to provide to vendors and creditors who require customer historical financial statements. These and other reports are also available in PDF format. The Overview Report is a multi-page narrative report that organizes and provides an interpretation of the forecast results. The report is divided into 2 main sections, the first of which, the introduction, provides some general comments about financial forecasting. The second section addresses the specific forecast scenario and describes the key drivers of the forecast and the financial metrics achieved during the forecast period. The report is organized in a manner to help the forecaster logically present and describe the key elements and results of the forecast to a third party. The first of 3 primary financial reports is the Forecast Income Statement Report, which, like the other reports in this menu section, displays both actual and forecast data. The second primary financial report is the Actual and Forecast Balance Sheet Report. The final primary financial statement report is the Cash Flow Report. The actual cash flow data is derived from the historical income statements and balance sheets recorded when a forecast is initiated. There are two versions of a financial assumptions report. The forecast model contains 175 assumptions in total. That's 35 income statement and balance sheet assumptions for each of the 5 forecast years. We forecast information at approximately the same level of account detail as an accountant standard year-end report. Finally, we have 2 financial metric and performance reports. The financial management report is organized into 6 management sections: working capital, assets, liabilities, profitability, debt, and bank borrowings. The report contains 43 different metrics for each of the 5 forecast years. Where appropriate, how the metric is calculated is displayed underneath the metric's name. The financial feasibility report is a subsection of the management report and focuses on metrics that are especially important to borrowers and lenders. The last section of the menu page provides a link to the financial forecast assumptions form. That form is the key to revising the first and subsequent drafts of a forecast into one that more nearly reflects the expected results for the business. To change the forecast assumptions, a user enters the new values in the appropriate fields and then saves the changes by clicking on Save Assumption Set at the bottom of the form. Once the revised assumption set is saved, all reports are recreated to reflect the changes. If the changes are made to the forecast assumptions but not saved, the current forecast is not updated with the changes. If a user wishes to preserve the current version of a forecast he is about to change, he checks Save as New Scenario and then clicks on Save Assumption Set. The old scenario is then preserved and the new one is saved with a new consecutive scenario number. A user may create as many versions of a 5-year forecast as he likes. Now that we've gone through the output of the established business forecast model and how to change forecast assumptions, let's look at what's involved to create the first draft of a forecast. Here are the steps. First, we enter our login and password and access the member section of the CorpFin.net site. Next, we click on Setup Instructions for an Established Business Forecast to access the Forecast Setup page. There are 6 simple steps to complete to establish a forecast project file. We need to enter the name of the business, select a unit of measure for reports, indicate whether or not the income statement contains a cost of sales account, select the legal form of the business, and indicate the number and dates of historical periods for which we will record historical income statement and balance sheet data. First, we'll enter the name of the company. We'll name it Company B. We'll then choose the units of measure to be used in all reports. We'll choose dollars and shares in thousands. Next, we'll indicate whether or not the company's income statement contains the account cost of sales or cost of goods sold. This choice affects the accounts listed in the historical and forecast income statement reports. We'll indicate the statements contain cost of goods sold. The fourth step requires us to select the appropriate legal form of the business. We'll select a corporation as the legal form. Step 5 is where we determine how much data entry is involved in creating a forecast. There's no getting around it. If we're going to create a financial forecast with any forecast application, we're going to have to do some data entry. We've tried to make this step as efficient as possible by using a chart of accounts that is at approximately the same level of detail as an accountant standard year-end report, and by having the software calculate subtotals, totals, and percents on the data entry forms. With our forecast application, we can enter as little as 1 year's historical income statement and balance sheet, or as many as 5 years of such statements. The trade-off is between less data entry, less financial history, and fewer historical metrics for use in setting forecast assumptions versus more data entry, history, and metrics for guidance in making forecast assumptions. Users of financial forecasts generally prefer to view a minimum of 3 years of history, side by side with forecast output to give context to the output. In this instance, we'll record 4 years of historical annual data, with the earliest period to be recorded being the 12 months ended December 2006. When we enter the earliest period, the software fills in the subsequent period ending dates. Finally, in step 6, we click on Continue to access the income statement and balance sheet input forms on which we will record the 4 years of historical data. The income statement input form is in the format of the income statement report. All one needs to do is enter the data from a company's historical records. One important convention to note is that a minus sign must precede the cost of sales amounts. Before clicking on Save and Proceed to Balance Sheet Update, we make sure that the data entered in the income statement input form is identical to the information contained in the company's historical records. The balance sheet input form is in the format of the balance sheet report. Again, all one needs to do is enter the data from the company's historical records. It's very possible that accounts on the input form will have zero balances. Just leave those cells blank. The software will fill in the zeros later. As with the income statement form, make sure that the data entered in the balance sheet input form is identical to the information contained in the company's historical records before clicking on Save and Return to Member page. When we are returned to the member page, our new Company B project is listed, and we are prompted to create a new multi-year scenario. When we click Create, we are taken to the Forecast Key Assumptions page to complete the final step to create the first draft of our multi-year forecast. On this page, we enter the expected year-to-year percentage change in net sales for years 1 through 5 of the forecast period. For a sales decline, we enter a minus sign in front of the percent change. When we click on Create Multi-Year Scenario 1, we create both the Company B project on our member page and the first draft of our forecast, and we are automatically transferred to the Company B Multi-Year Scenario 1 model menu. We then review and revise the first draft of our forecast, which is principally a momentum forecast, a forecast based on Company B's forecasted sales and its historical operating metrics. That's all there is to it. To recap, to create an established business forecast, we log in, click on Setup Instructions for an established business forecast, enter 5 items of setup information, record 1 or more years of historical income statement and balance sheet data, enter the expected annual changes in net sales for each of the forecast years, and we instantly create the first draft of a 5-year forecast that is documented with 10 different reports, which are historical income statement and balance sheet reports, a narrative report that is organized in a manner to help us present the key elements and results of the forecast to a third party, forecast financial statements and multiple versions of assumptions reports, and comprehensive financial metric reports. The forecast and all the reports related to it is regenerated instantly when we change 1 or more of the forecast assumptions. We've now reached the end of the forecast tutorial. I'd like to close by repeating the idea I mentioned earlier in the presentation. Namely, please consider using our software to satisfy your financial planning and analysis needs. It's fast, easy to use, and it bridges seamlessly to our companion corporate finance applications. Accentuating these positives is our software's web-native design and sharing function, which gives team members the ability to collaborate using a common platform.